What's a day it's been indeed. First with Urjit Patel's surprise exit and the impact that was being felt today, and then the counting in the 5 states spread across the country. The TRS has held ground in Telangana while the Congress has lost its last bastion in Northeast, but the other 3 have mattered the most. Kaushik Vaidya is now here with all the latest updates. And Kaushik, it's going down to the wire in one state at least.
That's right. That's in the state of Madhya Pradesh. The biggest prize on offer today for the BJP and the Congress. They're going to break down for you at this hour which way this election is moving in terms of region-specific moves, that the Congress, how has it been able to notch up its tally, where, in what particular parts of the state have the BJP's tally and seats that they won before gone down. Let's go region by region. In Malwa, in 2013, that is the westernmost region of the state, if you see in 2013, the BJP had 13 seats, that's down, 31 seats, that's down by 10 right now and stands at 21. The Congress notched only 4 seats from here in 2013, that's up by 10 to 14. Let's move now to the southern part of the state. In the southern part of the state of Nimad, the BJP had 31 seats, that's down to 20. The Congress has gone up from 6 to 15. Where this election has swung towards the Congress from how it had performed 5 years ago is the area where Jyotiraditya Scindia is pretty strong. In the area of Chambal, in those areas that are bordering Uttar Pradesh, you have the Congress going up all the way from 12 to about 23 seats in that region. The BJP's tally falling from 20 to 7. In and around Bhopal, where the BJP had earlier clocked 19, is now down to 13, and the Congress, which was at 5, is at 12. Let's switch to Rajasthan now. Remember, Rajasthan 5 years ago had a historic mandate where Vasundhara Raje came into power with 163 or 200 seats. Now, how is that fared? Which parts of the state have moved towards the Congress? You had 2 particular regions. There's Marwar and Mewar, which is the westernmost region of the state, and then just south of that, but the BJP had completely swept the state 5 years ago. 5 years ago, the BJP notched up 52 out of Marwar seats. That's down to 27, and the Congress has gone up from 5 to 25. So when you see that tally converge, this is where the Congress has been able to make it converge and take the lead. And then you had the state in the region of Mewar, which is in the southern area of the state. The BJP had 55 seats in the outgoing assembly. That's likely to be down to 32, 33 now. And the Congress has gone up from 4 to 24.
All right. Thanks a lot for that, Kaushik. Let's, in fact, bring in one more voice on the same. We've got Alastair Newton of Alavan Business Advisory, who's joining us on the show right now. Alastair, thanks very much for taking out the time, sitting outside India and being an observer of how the election picture is unwinding right now. What's the initial sense that you're getting, and what is the chatter in the corridor?
Well, it's bad news for the BJP. There's no question about that. Even if they manage to hang on to Madhya Pradesh, in the 3 states where you'd expect them to do well because they're what you could loosely call the Hindu belt, their heartlands, all intents and purposes, they have lost a lot of seats at the hands of largely Congress. And Congress has clearly put up a good show. Now, we can write a certain amount of this off as anti-incumbency and maybe not worry about it too much. But with the general election just 5 months away, 5 months or so away, I think the BJP has got to do a lot of very, very serious thinking indeed if it is to secure a second consecutive term in government. And this is bound to, over time, I don't think it will today or even tomorrow, this is bound to have an impact on investor sentiment over India. Now, clearly on what you've been saying on the programme about the performance of the stock market today, it might be easy to say there's no impact at the moment. Investors are not being perturbed by the election results. I would actually argue it slightly differently. I think in the light of these election results and in the light of Dr. Patel's resignation, investors are probably expecting that there is now going to be something of a monetary stimulus forced upon the RBI, and that is actually going to be good for Indian stock valuations, and especially when one considers the immediate external context of lowering expectations of US rate rises next year, and of course, low oil prices relative to where they were 6 or 7 weeks ago. At the moment, this kind of looks good for Indian stock market. I think that will wear off, though, as we get closer to the general election, if it looks like BJP is going to get beaten by Congress come May.
Alastair, just when you're looking at it from a market standpoint, today's session particularly started off on a lower note, but as we speak right now, we have the indices trading in the green after losing almost 1.5% at the start of the trading session. The volatility which surrounded the event risk has come off sharply. Do you see some amount of stability seeping back into the market with this event now out of the way?
I think volatility in the Indian market could be driven significantly by external factors. If we see the oil price continuing to fluctuate over the sorts of range which we've seen even in the last 6 weeks, if there is more uncertainty about the trajectory of the Fed, then we could see more volatility coming back into the Indian market. And I just want to say a word about the Fed. I think a lot of market participants are overreading the Fed's recent statements. What the Fed has said is we're going to go with the data. We're going to stop doing forward guidance. We're going to go with the data. So to just conclude that there's only going to be one rate rise this month and then one rate rise next year seems to me a big extrapolation from where the Fed is today. And I think there is quite a lot more uncertainty about what happens to the US interest rates next year than a lot anticipate. And then, of course, you've got Donald Trump's protectionist agenda and US-China relations, which could spill over into something of a global hit if things escalate as they may, as I personally think they probably will, over the course of the next several months.
Okay. Alastair, just one question. You kind of part answered it, but I think the opinion is divided about whether or not one can extrapolate this in a big way for what could happen in May 2019. You are an observer of many such political cycles in India and across the world as well. How would you read into this assembly election verdict and the impact that it could have or would have on the national elections come May 2019?
Well, I'm always cautious about reading too much into mid-term regional elections, wherever they take place. In exactly the same way as going back, whatever it was, 20-odd months or so ago, when the BJP managed to win some sweeping victories, performing more strongly in the sway of the regional elections at that time than many had expected, myself included, I'd add to that. There was this, this is great, Modi is now assured of a second term. Well, since then, of course, during the course of this year, we've seen a lot of less positive election outcomes for the BJP, even though personally, I wouldn't read a lot into the fact that they lost some seats in Gujarat, which was cited at the time as being a flagship election. They still managed to cling on to power there, which I think was the key thing. I think BJP will give a lot of careful thought to how to fight the election campaign. We should not underestimate Narendra Modi's personal charisma on the stump. He's a formidable election campaigner. And although Rahul Gandhi has undoubtedly lifted his game as an election campaigner over the course of the past 12 months or so, he does face a formidable challenge in dealing with Narendra Modi in what will be, to all intents and purposes, a very presidential-style election campaign. But the BJP does have a challenge to face. It needs to convince voters, and I think this is evident in the results which are coming through today, it needs to convince voters that if it does win power again, this time it will deliver more thoroughly on its pre-election promises, especially as far as jobs are concerned, than it has managed to do in the past 4.5 years. Because the big disappointment with the BJP, apart from the mishandling of the currency issue, apart from the mishandling of the sales tax issue, the big disappointment has been failure to deliver on its pre-election promises. And somehow, Narendra Modi has got to convince the electorate that if he gets a second chance, he is actually going to deliver. And it matters much more that he does that to the electorate right now than that he does it for foreign investors.
All right, he's got a big job ahead of him. Thanks very much, Alastair. Appreciate you taking out the time and joining us with your thoughts on the show. All right, moving on then. Indian markets have posted some recovery from the day's lows, and in fact, some of the benchmark indices are trading in the green. What's also surprising is the cool-off in the volatility index. So what's actually at play here? Well, Nilesh Shah of Envision Capital believes that the investors are looking for clear directions. Listen in to what he had to say.
We are getting into a situation where the global scenario too looks relatively tepid or relatively weak. But when we kind of really talk to institutions, they're really not too kind of concerned about what's happening globally. I think for them, when they are making India allocations, they're really kind of in a way figuring out how are India's macro shaping up. And in an environment like this, unfortunately, the focus is really not on the micros. The focus is not in terms of how corporate earnings are shaping out, but clearly what's happening in terms of the macros. And clearly, therefore, there would be definitely questions in terms of what could be the potential outcome of the general elections in 2019, what could be the shape of the next government, and so on and so forth. And these are questions for which maybe some of these questions are yet premature. Some of these questions don't have ready answers, and therefore you kind of get into a bit of a period of uncertainty. And clearly, equity investors do not like uncertainty, and that could kind of cause them to, in a way, hold back and wait for things to get more clearer, both on the political front, on the fiscal front, as well as on the monetary front. So clearly, I think a bit challenging in terms of some of the macros and some of the macro developments. So that is how really the big picture is emerging. That we could basically see some period of uncertainty for the next few months.
Since talking about the macro picture, Nilesh, I want to ask you, we have seen crude oil come off sharply, and now that even after the OPEC has said that it's going to cut about 1.2 million barrels per day, the reaction to crude oil prices wasn't all that sharp on the upside, which probably is the silver lining for our twin deficits as well, and for our macros in a way. Inflation in any case has been coming off and has been undershooting the RBI's own estimates. So on that front, do we seem to be fairly sanguine?
Yes, that in fact is really the big positive for India. So I think while the macros may not look all that great from the various events which are unfolding now or which could unfold in the next 3 to 6 months, but clearly I think we remain long-term optimists. We clearly believe that the current downtrend in commodity prices, including crude oil prices and all of that, I think really bodes well for India. Clearly the downturn in prices of other commodities like industrial metals, I think is going to be a big booster for corporate earnings. So I think that's one big positive. The second big positive is essentially the continuous fall in the consumer price inflation. I think to give credit to this government, they have been able to, in a way, systematically lower consumer price inflation, which I think is a huge positive, which I think increases discretionary incomes and increases discretionary spends. So that is likely to kind of boost consumption in the medium to long term. So that's the second big positive. The third big positive is the positive fallout of the GST has not yet fully played out. In fact, it has had its own share of challenges and problems in the very short term, but I think the positives of the GST will kind of be seen over the medium to long term. In addition to that, the latest in the RBI's monetary policy, it was spelled out that the investment cycle is beginning to see signs of a pickup. And as you see increased capacity utilization, you will clearly see the investment cycle gather momentum even further. And if in 2019 we see rate cuts, and we clearly believe there's a strong case for interest rates in India to kind of be cut, I think all of these things would be very, very positive post the middle of 2019. So while on one hand some of the macro events could lead to lower market levels or lower stock prices, but we clearly believe that over the medium term the fundamentals of corporate India are likely to improve, and therefore we are likely to see value getting created, and therefore the current mood in the market and the current downtrend which is set in because of some of these events is actually kind of going to pose a very, very attractive opportunity for long-term value investors.
Right. Nilesh, one last question before we let you go. You said it's the right time to get your shopping basket ready and make sure you get, those value picks for yourself from a medium to a long-term perspective. So, maybe not stock specific, but if you go a little bit broader and talk sectors, what's your basket looking like?
Well, I think if you really look at the two very big structural opportunities in India are clearly the consumption space as well as clearly the financials space. These are two very long-term structural opportunities which India has. Over the last 1 or 2 years, the valuations of some of these consumption plays, banking plays had turned relatively unattractive. And we clearly believe that the current mood in the market, and if a downtrend were to persist for an extended period of time, there would be a reality check on the valuations of some of these high quality financials and high quality consumer plays. So we clearly believe, and historically, whenever the market mood turns negative, we see some kind of contraction in the valuations of high quality names, especially in the areas of financials and consumption. And the best time to buy high quality names are when not necessarily the fundamentals have weakened, but because the market sentiment has kind of turned bad, and therefore the valuations have turned more attractive, more reasonable, and more affordable. And therefore, I think over the next few weeks, few months, we think that watch out for the space in high quality financials, high quality consumption names, and I think at attractive price points it would be a great idea to kind of go out there and shop in these names.
Got that. Nilesh, Shah, thanks very much for joining, and really appreciate you taking out the time and speaking with us.
Thank you. My pleasure. Thank you.
Thank you.